What's up, everybody? Welcome back to another video. In this one, I'm going to talk about the most important things that I've learned in the stock market so far. And at this point, I've been investing in the market for around 5 years now, and I've been educating myself on it for a lot longer than that. And trust me when I say I have made some bad investments, and I've also made some good ones. So I just want to share my experience here, and I think I'll be able to provide you guys with some pretty good value in today's video. If you're new here, my name is Sheldon, and I like to make completely transparent videos talking about how I invest in the stock market and just some more general stock market content. So if you're interested in learning how to analyze stocks and how to build your own portfolio, then subscribe to the channel, check out some of my other videos, because that is what we talk about here, and join me on this crazy journey that we call investing. And that actually leads me to one of the first key things that I have learned investing in the market so far, and that this is a journey. I understand that you might have a destination in mind, like you might have X amount of dollars in your head as to what your portfolio, or as to what you want your portfolio to be, X amount of millions of dollars. But you have to understand that that is going to take a lot of time. And it's the journey that you actually have to embrace in a way, because, wishing that you're just going to instantly end up at your destination with this investing stuff is basically you're wishing your life away. You are not going to get rich quick in this game. And the more that you try to get rich quick, I actually think you're just going to end up going broke faster. You have to build this into a lifestyle. You have to live the life of, in your spare time, you analyze investments, you research companies, you pay attention to the news and even politics to a certain extent, and you have to put the time into understanding business and even marketing and sales and just everything. You want to fall in love with the process. And I believe it's important to do that, because that's what actually makes it sustainable. And that is what is going to allow you to actually get to that destination that you have in mind, by embracing the process, putting in the time, doing the research, always continuing to learn, and essentially being patient. Being patient is the most important thing here. I think stocks go up and stocks go down. And a lot of people are new to the market right now, and we're essentially in this crazy 2-year bull run, which I can actually pull up the S&P 500 right here. So if we pull up the S&P, this is like a 5-year chart of the S&P, right? And we've basically been in this bull run for 2 years now. And I understand that there is a lot of new investors in the market, because when the market does really well, a lot of people start to get into the market. So for anybody that is relatively new and is listening to this, and you've only been investing in the market while it's been going up recently, stocks do go down. And the mindset that you have to build to be successful long-term in the market, or at least what I believe, is that, when the stock market goes down, when you look at your portfolio and it's red, that's actually a good thing. That is when you actually really make better money in the market. For example, I started buying Palantir stock, when the market was crashing in the latter half of 2022. And now currently I'm sitting up over 700% on that position, and it's because I was willing to buy that stock when nobody else wanted anything to do with it. And that's the correct mindset that you have to be successful long-term in the market. It's the Warren Buffett quote of "be greedy when others are fearful and fearful when others are greedy." It's just true. There's a lot of these cliche quotes that you're going to hear, like time in the market beats timing the market. And, it sucks to be so cliche with them, because you do hear them a million times, and they kind of go in one ear and out the other eventually. But the bottom line is they are true, and you need to be patient. You need to embrace the market when it's going down. That is when you actually make money in the market long term, because you can buy these stocks at discounted prices. Looking at the market right now, you're not going to get into a lot of these stocks at crazy discounted valuations just because we've been in a bull market for so long. So the mindset of a lot of the market right now is stocks just go up, and that's not true. They went down for a long time in 2022, or 2021 and 2022. So, or they went up for the majority of 2021, I think. Yeah, and then they started crashing in 2022. And I made it through that crash. I had my portfolio in the negative for a long time, but I stuck with the mindset of continuing to invest, not giving up. And time in the market beats timing the market. You don't try and time the market. Don't day trade. That might be a little controversial, but I don't think trying to get rich quick is how you're actually going to build long-term wealth in the market. And like I said, I think it's actually going to cause you to go broke faster. The next really important thing that is pretty much the foundation to being successful in the market, and something that I think also gets overlooked a lot, because it doesn't even have anything to do with actually investing yet, but it's to do with your income. You are not going to get rich in the market if you're not putting money into the market. And with stocks, it kind of takes money to make money. So, it kind of goes back to what I said about this being a lifestyle, but you have to do this on the side. You have to take your disposable income and put it in the market. And for example, for me, I currently have around $80,000 in the market, but I have contributed pretty much, or I've contributed $49,500 into the account. And, you're not going to get rich and make all this money without making those contributions. So you need to have a job. You need to have a career. The amount of money that you actually put into your portfolio is one of the most important numbers that there is. So always focus on how you can increase your income and decrease your expenses and input more money into your stock portfolio. That is what builds the foundation of your ability to make money in the market. And it's one of the most important things that I don't think you really hear enough in the stock market community, because it's not like a flashy thing. It doesn't get the clicks on YouTube, I guess, to talk about increase your income, decrease your expenses, but it really is one of the most foundational things, and it's going to be what allows you to build that long-term wealth, because it's your foundation, essentially. So now that you understand that having a long-term and patient mindset is key, and focusing on your income are very important to investing in the market, or at least those are two things that I've learned. What is actually important when it comes to buying stocks? And I'm going to pull up, for example, Google stock chart here. And side note, they're kind of having a crazy day, 4.5% today, which is really, really good for a big tech company. But basically, obviously, investing is a finance game, and understanding finance concepts and aspects of how a company operates from a financial perspective is very key. So if you don't understand a lot of the finance game, working towards building out your knowledge in finance is going to be very, very important, because at the end of the day, this is a game of money. It's a finance game, bottom line. And if you don't understand a lot of the financial concepts, then you're going to definitely struggle when it comes to understanding where you want to put your money. So if you're listening to this and you're looking at this screen right now, okay, you have a chart and you have some data here. Be honest with yourself. Like, how much of this do you actually understand? Like, if you look at this and you understand all of the numbers, you understand the chart, then that's a good, that you're doing good. If a lot of these numbers don't make any sense to you, you don't know how they relate to each other, then you are definitely going to want to put time into understanding that and understanding some of the fundamental financial concepts when it comes to investing. Like, how is market cap calculated, right? Like, that's something that's important. How does a company specifically make its revenue? So in terms of, we're looking at Google right now, what are the main income sources that Google has? Obviously, they're a digital advertising company. They own YouTube, and every single ad that you see on this platform, companies pay Google to run that ad, and it's how they make a majority of their income. Obviously, they have some other services. They have some hardware products, like they're trying to really break into the smartphone industry and sector, and they have Google Home, and obviously they have some other products and services. But for whatever company you're looking into, not just, I'm just using Google as an example here, you need to understand where that revenue comes from. And you also need to understand the difference between revenue and net income. Revenue is top line, net income is closer to the bottom line. Shares outstanding, EPS, PE ratio, forward PE ratio, like what do all of these mean? You have to understand that, because all of these numbers relate to valuation of the company and trying to understand, if you think that stock is trading cheap or if you think that stock is trading expensive. Because if you think it's trading cheap, then it's probably a good time to buy. If you think it's trading expensive, then you might not want to buy that stock right now. So diving further into their financials, like what is an income statement? What is a balance sheet? What is a cash flow statement? What are a lot of the most popular ratios and financial statistics when it comes to a company? And I'll be honest, I don't know what a lot of these ratios are. I could definitely look into them and probably understand all of them pretty simply, but the main ratios I look at is like PE ratio, price to sales. I prefer to dive further into financials on the actual statements themselves, or their quarterly earnings, and read through a company's 10K. Like, where do you find these 10K reports? All of these things you really have to focus on and understand if you want to invest in the market and build that long-term wealth. I hate to keep saying long-term wealth, but that's essentially the point here, right? That's why you're watching this video. To break it down a little bit for you, I guess, like revenue is obviously the top line number of all of their different income streams, and their cost, their revenue gets subtracted from that, and then you get your profit. And a lot of these are very, this is pretty introductory concepts here, but it's just really important to understand these things. Fundamentally, it's super important. And I could make a video going way more in depth onto financial statements, but you get your selling, you subtract your selling and general administration expenses, which is like salaries inside your company, things like that, research and development costs, and you have to be able to understand that this is a funnel, right? An income statement is essentially a funnel. Like, you have all this money at the top, and then only a certain amount of that money actually makes it down to your free cash flow. And free cash flow is a very important metric. That is what is really left over at the end of the day, and it's what companies can use to buy back stocks. It's what companies use to pay dividends or just invest back into the company or build up their own cash position. And it's a metric that a lot of financial analysts look at, because free cash flow growth is obviously really good for a company. Like, you want to hold stocks that are growing their free cash flow, or if companies don't necessarily produce free cash flow yet, if you hold that stock and then they make it to a point in time where they are producing free cash flow, then that is definitely going to be really good for the stock price. But it's also riskier investing in, earlier stage companies that maybe aren't profitable, or things like that. But this is Google, and let me tell you, this is like an A1 income statement. And so to go from like net income into free cash flow, like pretty much between those two line items on your income statement, you're going to get your cash flow statement. And this really breaks down where all the cash is flowing, basically, from its name. And to briefly dive into the balance sheet, this goes into assets versus liabilities. You can see a company's cash position here. Like, Google has $93 billion in cash, and, in total assets, they have $430 billion. Total liabilities, they have $118 billion. So, this all goes into like thinking about how long is this company going to survive for. And Google, they're going to be here for a while, because this is probably one of the best balance sheets in the world, out of any single public company that you're ever going to look at. So, and even just understanding that, like looking at other smaller growth stocks, like you're going to start to get a sense for just a company's financial position once you really start to dive into some of these things. One thing that I also really like to look at, and it kind of depends on the stock itself, but profit margin, and comparing profit margin to other competitors in their market. So obviously Google digital advertising, they have an insanely high profit margin, which is why they're such a big company. But, you compare this to something like Meta. Meta is a really good competitor for Google, because they both operate in that digital advertising space, and I hold both Meta and Google stock. So, It's things like this. You just have to, it's a finance game, and if you don't understand how to analyze the current financial position of an organization, then you really have to be working towards that. Maybe buy a course, read some books. If you're in school, like for finance, then there you go. But it comes down to it being a finance game, and the more you understand about business and the business models and how to analyze business models and how to analyze the financial position and dividends and competition of that organization and industries and where the market is in general and where the economy is in general, like market cycles and where you are. And that kind of goes back to looking at the S&P 500. Like right now, we're obviously at the top of a bull run, and not necessarily meaning that we're going to crash anytime soon, but you have to understand that we've been in a bull run for very long. And, sometimes they last for a really long time, but markets also pull back. So, trying to look at economic indicators like the fear and greed index and just all of these things that go into it are so important. And the more that you know about it is basically the bottom line of what I'm trying to say is that the more you understand about all of these different financial concepts, the easier it's going to be for you to be confident managing and investing with your own money and building your own stock portfolio. Another thing that I've learned that is very important to keep in mind when investing is instead of just honing in on one stock, you have to be able to take a step back and look at the whole portfolio as an overall strategy. And basically what I mean by that is diversification is very important, and not only diversifying within stocks, like maybe you want stocks in certain industries, maybe you want some blue chip stocks, maybe you want some dividend stocks, some growth stocks. So diversifying within different stocks is important, but also diversifying within asset classes is also important, and something like this is a strategy that I employ in my own portfolio. And if we look here, I currently have around 60% in stocks and around 35% in ETFs. And within the stocks, I think if we find like the securities here, so obviously I have a lot of tech, like it is relatively tech heavy, but that's because it's, a bit of a growth portfolio. Technology is really good for growth portfolios, but I also have like JP Morgan, Nike, Caterpillar. I hold VOO as one of my main positions. Like I have by far the most amount of money in VOO. And, I think it's really important to diversify, and having a silver bullet strategy where you pick like one or two stocks. You have to understand that could pay off really, really well. And maybe it has paid off for a couple people in the last 2 years because it's been a pretty green 2 years. But when the market crashes, those strategies get absolutely hammered. And I think it's more worth it to have a little bit more of a diversified, conservative approach. So when the market does go down, you don't lose as much money. But I'm also not telling you how to build your portfolio. This is just what I do, and I just like to share my mindset behind what I do. But you got to find something that works for you. Like if you want to go more risk on, then by all means go for it, but you have to understand that risk. That's the important thing that I'm saying, is if you only hold one stock and all your money is in that one stock and that stock goes down 50%, that's not going to be a lot of fun. So diversifying definitely mitigates the risk when it comes to how far your portfolio is going to crash when the market is crashing. And that's something that makes me more comfortable with how I am positioned in the market. And as you invest and as you kind of learn more, you're going to kind of come to your own risk tolerance and your own strategy for how comfortable you are with how your portfolio is positioned. But risk tolerance is very important to understand, and also how long do you have to invest. I'm young. I'm assuming most people that are watching these videos are also relatively young, but so you have a lot longer to invest for. And when you have longer to invest for, you can typically allocate a higher percentage towards riskier assets, because if those assets fall, if the stocks go down, then you have a lot more time to recover. You have more time for those. Maybe you're buying unprofitable businesses, which is typically looked at as more risky, but maybe if you're buying those, they have more time to, try to continue to push on their mission and turn into a profitable company. Typically that can take decades for a lot of these unprofitable companies to turn profitable. That happened to Palantir, and look what happened to Palantir stock. They just turned profitable in the last few years. So understanding risk tolerance, understanding overall portfolio strategy, and diversification are also all very important. And, that is a quick summary of some of the most important things that I've learned in the market. So to summarize all of that, some things that are very important are the things that actually happen before you even start investing. Like, what is your mindset? That will forever be probably the biggest thing. The number one most important thing is your mindset, and I believe having a long-term mindset is the most beneficial. But focusing on your income, that is also huge. Increasing your income as much as possible in your career, try and get as good of a job as you can, and then decreasing your expenses, which allows you to input more money into your portfolio. Is very, very important. And then when it comes to actually investing, understanding financial concepts and how to break down stocks, how to analyze financial statements and statistics, and understanding the market and understanding your portfolio and understanding your strategy, all of these things are very, very important. And they've been everything that I've learned in the last 5 years of actively investing and managing. They have been the things that have shown to be the most important. It's weird because the more that you learn, it almost seems like the more you don't know about something. It's weird because it's true. And every single day, basically, I learn new things about the market, and it just kind of comes with experience too, new things, and having a couple years under your belts. And having this channel is something that's been really cool to be able to connect with other people that are in a similar boat. So subscribe to the channel if that sounds like something you're interested in. We just talk about the stock market here. And if you want to build your own portfolio, then come along for the journey, now that you know that it is a journey and not not to have a destination in mind. But thank you so much for watching. That was pretty much everything I want to talk about. I wish you the best of luck on your investment journey. Peace.